has found a potential buyer coming forward for 2 assets in Mali, and it is still searching for a partner or a buyer for its Cripple Creek and Victor mine in the USA. The company wishes to reduce its debt by a third, or $1 billion.
Selling their American assets, the family silver or family gold as it may be, is one way to do that, and probably will not have that much opposition in executing it.
A previous attempt to restructure the company and to raise capital from shareholders was rejected.
Well, basically shareholders said no. When Anglogold said, well, we want to split off our operations into shall we say, the more sustainable assets and the more marginal assets, very much like Sibanye did, and Goldfields did a little bit earlier, and in a similar fashion to what Billiton is doing, also reorganizing its assets into the more stable, let's say less risky assets, and the more assets that's a little bit more marginal but can be focused on and possibly get a higher return from the refocus of management between the two sections.
The company says its South African operations are not affected at all by the latest developments. But analysts say that local assets may eventually be sold too, despite the difficulties this may encounter.
It depends on what terms, and the big point there is what's going to happen with labour, because labour and the effect it has on local operations is so big that you've got to satisfy quite correctly what is going to happen should the sale take place, what is going to happen with labour itself. If all parties agree, then obviously I don't think anybody would have anything against it, but there's far more hurdles to jump across than, for example, just selling off a mine in North America as they're doing right now.
Gunther Deutsch, SABC News.